Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning July 18th. The week starts off slowly with little on the schedule today, but things gradually pick up with a few but important indicators, and by Friday we get the first round of the July Purchasing Managers Indices. The highlight of the week promises not to be that much of a highlight, the ECB meeting on Thursday. Economists unanimously expect them not to make any changes in rates or make any other policy moves. Now, as we saw last month, when they made no policy changes, volatility was nothing special. In fact, the range on the day was below average. This time around, look for comments on Brexit and on the banks, particularly what the ECB response to a banking crisis in Italy might be, but don't look for any fireworks. The other big day is Friday, when the preliminary PMIs for the major industrial countries will be released. This time only, market will release a flash PMI for the UK, together with the other countries. Now, the June PMIs were nothing to get excited about. The global PMI was unchanged at 51.1, below its long-term average for 10 consecutive months. The weakness is expected to continue in July, as every PMI is expected to decline from June's already depressed level. This could contribute to dollar weakness if it means investors further push off their estimates for when, or even if, the Fed raises rates again. For the EU, the other important points are the ZEW survey on Tuesday and European Commission Consumer Confidence Index on Wednesday. There's other key data out for the UK this week, as well as the PMIs, and as we saw last week, investors are still paying attention even if the data are pre-Brexit. The CPI on Tuesday is expected to show a small acceleration in inflation. Now, inflation expectations initially jumped after the Brexit vote on the assumption that lower sterling would mean higher prices, but since then, expectations have come back down, presumably on the assumption that weaker activity means weaker prices. Wednesday, we get UK employment data, and Thursday, UK retail sales. In any case, the tone for sterling may be set today when Monetary Policy Committee member Martin Wheel speaks on the implications of Brexit for monetary policy. Wheel's the second most hawkish member of the MPC, so if he's dovish, then pretty much everyone's dovish. There isn't that much crucial information coming out from the U.S. this week. We have to wait till Thursday to get the Chicago Fed National Activity Index and the Philadelphia Fed Index. Last Friday's worse than expected Empire State Index raises the risk around these indices. Otherwise, most of the U.S. data concerns the housing market, starting with the National Association of Home Builders Housing Index today. Last month's housing data was fairly weak, so investors will be looking for some rebound. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.